Investors around the globe always look for 100% safe investment. They want their investments to be absolutely safe. Is it possible to find a 100% safe investment amongst all the investment avenues that are available to us? I personally feel none of the investments what we know of are 100% safe. In this episode, I am going to discuss all these points and see whether we can find a 100% safe investment. This is NRI Money Clinic for you, and I am Dr. Chandrakantha, but investment consultant and a financial planner.
NRI Money Clinic. No hype, just the right advice.
Now let us look at one by one every instrument that is available for us to invest our money and see whether these are 100% safe. Many people are fans of blue chip stocks. They feel investing in blue chip stocks is safe. Is it true? Now you invest in blue chip stock today, and in a week or a month or a year its price can fall down. But because it's a blue chip stock, you think after some time the prices will come back. Normally that is the case. I agree with you. But can you take it as guaranteed that the prices which have gone down will come back? The answer to that is no. I will illustrate this with the help of an example. Now all of you must have heard about a great company called Satyam Computers. A decade before, it was one of the top 10 stocks on the Sensex. Overnight, a fraud was detected in Satyam Computers and this blue chip stock went bust. Why Satyam Computers? There are plenty of examples. What happened to companies like BSNL? What happened to companies like Hindustan Motors, which was manufacturing ambassador cars? What happened to companies which are manufacturing Fiat cars? What happened to companies like Nokia? If you search through, you will get countless examples of blue chip stocks. The recent examples has been Kingfisher Airlines, Jet Airways, Diwan Housing Finance Corporation, Syntex. Many of these stocks were the blue chip stocks. So the argument that the blue chip stocks are 100% safe is not correct. These blue chip stocks also are not 100% safe. They have their degree of risk built into them as well. The next instrument we look at is the mutual fund schemes. Do you think the mutual fund investment is 100% safe? The mutual funds have come into play to mitigate the risk and to give you a lot of other benefits that come with that. But are these instruments 100% safe? If they are 100% safe, why does the regulator runs through a message on the advertisement, mutual funds are subjected to market risk? You need to read the offer document carefully before you invest into the schemes. In reality, mutual funds are relatively safe. They are not 100% safe. They are safer than picking up any particular stock. They are safer than picking up any single mutual fund. But in a short run, today you buy, tomorrow, next week, next month, next year, their valuations can move up and down. So it's not possible to say that even the investments in mutual funds are 100% safe. One of the most popular place of investment is real estate. Is real estate 100% safe? Many people think that yes, I have got a site, I have got a property, I have got a flat, I have got a real estate, I can touch and feel it. Is it 100% safe? Even here in case of real estate is not 100% safe. In fact, real estate is more riskier than most other instruments. When you buy a property, are you sure that you will find a buyer whenever you want to sell it? So your real estate has a liquidity risk which is built into it. When you buy a flat with a builder, is there a guarantee that the builder will complete this project on time? Now in the Delhi NCR region or in many other cities of India, you have several projects which have been stuck because the developers do not have the money to complete their project. So what you think that the real estate is 100% safe is not true. In fact, real estate is more riskier than many other avenues of investment. Indians are madly in love with gold. Gold is the place they feel investments are very, very safe. Is the investments in gold is 100% safe? I do not think investments in gold is 100% safe. There are two risks with gold. In fact, there are three risks with gold. One, the fear of losing to thieves. If you keep the physical gold, somebody may steal it from you and you may lose it. But if you keep e-gold, or if you keep it in the form of an ETF, or if you keep it in the form of a gold mutual fund, theft may not be a problem. But if you buy gold today, tomorrow its price can come down, its price can go up. In fact, gold is said to be having a 30-year cycle, which means if you buy gold today, for the gold prices to come back to normal, it could take up to 30 years. That's a distinct possibility. Now, if you look at what happened to gold in the last 10-20 years, I don't have to prove a point here. Gold has moved up, gold has come down, gold is going through a cycle every now and then. So, your investments in gold with respect to its price can't be said to be 100% safe. Yes, you may say that I have physical gold with me, I can sell it and generate some cash. Will you get back the same value? I'm not sure about it. If you convert the gold into a jewelry, whenever you convert the gold into jewelry, some amount is lost for as a making charge and the process loss as well. So even there also you stand to lose the real gold as well as its valuation. So don't be under the impression that whatever you invest in gold is 100% safe there as well. So which is our next favorite investment avenue? We all put money in fixed deposits of the bank. Is your money 100% safe in the banks also? Answer again is no. Your money is not 100% safe in banks. There are two risks which are involved here. One, the risk of bank closing down. You have a doubt? What happened with the PMC bank recently? Sometime before, Global Trust Bank had a similar problem. And if you check through the history of closed banks in India, examples will gather. So it's not a one-off case of PMC Bank or one-off case of Global Trust Bank. Every now and then, in some nook and corner of India, one or the other bank has closed in the past many years. There is a second risk with your fixed deposit. That risk is you may lose purchase value of your money by keeping as a fixed deposit. I will take the recent example. Between 2010 and 2014, if you do a Google search and check what was the fixed deposit rates and what was the inflation, you will be up for a rude shock. We had a bank FD rates which were in the range of 9.5%, and the underlying inflation was about 10 to 12 to 13% during these 4 years. Now what it means is that when you keep money in the bank earns you about 9.5% interest, whereas the purchase value of goods and services have been rising by 11, 12, 13%. Just by keeping money in the bank, the purchase value of the cash that you have is eroding. You are NRIs, you must be keeping your NRI FD and feeling happy. What if you were to be a resident Indian? What about the story of resident Indians? They have kept money in the bank. If they are paying income tax, already the purchasing power of these FDs is being eroded by inflation. Over and above that, you have to part a portion of these interests to the government as well. So the concept that the fixed deposits are safe is again not true. The next possibility where you can invest your money is government bonds. Are the government bonds safe? Yes, for your principal amount, the government bonds are safe because government cannot default. But where does the risk come from? The risk comes from the interest rates. Now, the government will give back your money back on maturity and it will continue to give you the coupons. But if you want to sell these bonds in the interim, the price of this bond may fall or it may gain depending on which way the interest rates are working. Yeah, as you may be aware, the price of a bonds are inversely proportional to the interest rate, which means you buy a bond, let's say at 8%, and if the interest rate fall down to 7%, the price of the bond goes up. Or let's assume that you have purchased the bond at 8% and the interest rates moved up to 9%, then the price of the bond will fall down. So when the price of the bond falls down, if you want to liquidate your assets, then you may not get what you have really paid for this bonds as well. So the concept that the government bonds are safe is also not true. They are subjected to interest rate risk. Another avenue which investors look for in investing is buying into currencies which are available around the world. Dollars, GBP, Euro, Yen, emerging market currencies, and various other currencies which are available for trading. If you think investing in these currencies is safe, no, they have their set of problems. The value of these currencies will not remain same. They will move up, they will move down. For example, a couple of decades before, 1 GBP was equal to approximately $2. What happened to the value of GBP now? It has come down drastically down. Look at our Indian rupee. 10 years before, Indian rupee was at, for $1, we were getting 45 rupees. Today, for $1, it is 75 rupees. What happened to euro? It was $1.4 per euro. Today, it is in the range of about 1.1. What happened to yen? The same story. Yen too also has depreciated. If this is the story of last many years, the only currency which has more or less held its value is dollars. Is there a guarantee that the dollar will hold its value for next 5, 10, 15, 20 years? I do not know. What do you think? What can happen to the value of dollars in years ahead? Please comment below. So where else can you invest? Commodities could be one another place where you can invest your money. Is commodity prices safe? Absolutely not. They are subjected to more cyclicity than any other investment. Commodity prices will go up, commodity prices will come down, be it the agricultural commodities or be it the industrial commodities, silver, copper, nickel, gold. You take any commodity, its prices are not safe and it will not remain static. They will go up, they will come down. So the assumption of safety with respect to price here in this case is also a myth. So coming back to the original question, are there any investments which are 100% safe? The answer is clearly no. 100% safety is an assumption and a myth. It does not exist. If 100% safety is not possible, what is that we can do? That is where the role of financial planners will come. When you engage a financial planner, he can calculate the risk. He can minimize the risk. He can find ways to mitigate the risk. So he can reduce the risk to a manageable level. He can do a risk profiling of a customer and he can find what can work for him, what cannot work for him, his timelines and all these things, and design a portfolio suitable to a client. Hope I have given you the risk which exists in each and every investment avenue. If you like the topic that I discussed today, give me a thumbs up. Please don't forget to subscribe to this channel and share these videos with your friends and relatives. Thank you very much for watching this episode on NRI Money Clinic. I will be back with you with one another topic and one another video very, very soon.
Press the bell icon for more details and subscribe our channel.